Now, making markets for hard-to-trade or hard-to-value assets such as mortgage-backed securities, collateralized debt obligations, it has been a major preoccupation for Wall Street as well as Washington since the financial crisis. Now, my next guest thinks that his company may just have the solution. Joining us now for a CEO sit-down is Barry Silbert. He's the chief executive of SecondMarket. SecondMarket is the largest secondary market for illiquid securities, and it was just named one of Inc. magazine's 500 fastest growing companies. Barry, good to have you with us on Bloomberg.
Thank you.
Now, for those that don't understand the world of secondary markets and it's an online exchange, explain a little bit about the kinds of things that people can buy and sell if they come to SecondMarket.
So most investors are familiar with the investments that trade on exchanges, things like equities and bonds and options. We're focusing on the everything else. And what's amazing is the everything else completely dwarfs what trades on exchange. So it's things like auction rate securities, limited partnership interests, the toxic assets, even private company stock.
So the kinds of things that are for sale, they don't have necessarily a ready market out there in the public. How do you figure out price discovery? How do you know how much something might be worth?
Well, I think that's why there's such a need for this, because there's tens of thousands, maybe even millions of holders of these assets. Yet they've never had a venue where they can come together to research and to understand and to basically trade these assets. So we bring them all together on our platform. We have about 16,000 investors who have signed up now who negotiate transaction prices through our platform and also over the phone with us.
Now, you started the company, so you built this thing up from nothing into what, about 16,000 participants
so we have 16,000 buyers. We have about 130, 140 employees based here in New York. Like you mentioned with the Inc. award, we were one of the fastest 500 growing companies in the country last year.
Now, is it possible that, let's say, you would have a relationship with a bank or with some kind of financial company that comes to you and says, look, we don't want to get into the business of trading these, creating an exchange to trade these ourselves. We'll supply the inventory to you, and we're hoping that you're going to bring a lot of buyers and sellers together for us on this exchange.
Well, that's exactly kind of the service that we're able to provide. A lot of the sellers tend to be the major financial institutions. So they may have a desk that's set up to sell these assets, but their network of buyers may be fairly limited. So for some of the more esoteric type assets, they just don't have a 16,000 network group of buyers. In certain asset classes we're in, things like private company stock, we have emerged really as the primary marketplace for those companies.
I'm going to get to Facebook and private company stock in a second. I want you to step back and tell me about something called auction rate securities, because that was in the news for many months when we had the financial crisis. And these have to do with municipal bonds that were issued, and they renew on a very small time frame, 7 days, 15 days, 30 days. Auction rate market. Is it still broken? It's broken.
I mean, it's arguably the first toxic asset. In February 2008, the banks who had been supporting this market, which was $330 billion of this out there, stopped supporting the market. So what happened is the auctions stopped succeeding, so there was no secondary market. So within 2 weeks, we launched on SecondMarket, a marketplace for these auction rate securities. Still a pretty big problem, about $140 billion left outstanding.
All right, now I mentioned Facebook, and you've been in the news having to do with Facebook, mainly because there are some ex-employees of Facebook. They've got company stock. They don't know where to sell it. They come to you.
So there's a really big issue that's happening right now. The IPO market in the U.S. is fairly weak, and if you want to go public, you have to be of a certain size, have certain characteristics. So there's many companies that can't go public or don't want to go public. So we created a market for those companies, those venture-backed companies, the Facebooks, the LinkedIns of the world. So it all started about 2 years ago. We got a phone call from a Facebook former employee who said, "I left the company. I want to go buy a car. Help me out."
Well, I want to thank you for helping us out, understanding what's going on in the world of second markets. I want to appreciate your giving us some insight, because it's an esoteric world, but you're making it clearer for all of us.
Thanks.
Thank you very much. Barry Silbert coming to us from SecondMarket.